Hey, this is John. I'm back with a second recording for today. It's Tuesday, September 2nd, close to 1:30 p.m. in Europe. So price has decided to apparently move below the low boundary of the range that was capping the prices since the morning. I'm gonna go and head with a short as we are getting lower on this price action. So this candle that broke the low of the range was coming with a lot of volume. If you look on the 10-minute, it sits right about the Monday's high price level. So it's possible that we revisit, that price wants to revisit Monday's mid-range at around 108,600 and some change. So that's why I'm entering short. I'll keep an eye on the position. I'm not putting a stop just yet, but I keep an eye on the position, but I just want to be extra pressing on this move because I think it may be a swift move to the downside. I don't think there will be a lot to take from this down move. Let's keep watching. Price is attempting to climb back towards the low of the range, so I'm going to add another short for a quarter of a contract. So that's a total position of half a contract. And yeah, I still don't place my stop because I don't want to get triggered. So here is the tricky part for me. Price appears to be willing to go lower. I'm currently in for half of a contract. I'm gonna add a sell stop just below that if it's not triggered on the way down. Okay, and then I place my stop overall position right above these two candles. So if this one gets triggered, the last one, the sell stop is gonna be 3/4 of a contract position with a stop loss, sorry, currently representing $27 because I expect a swift move down. That's my play for now. Swift move down, and I will be out very quickly. All right, resuming the recording, it seems that price action is, and there you go, another quarter of a contract taken. So total position is for 3/4 of a contract. And now I expect a swift move lower. I will immediately place a stop loss, which I was waiting for all the position I was planning on taking to be complete. Now it is complete. I'm not going to go to one contract because I expect a swift move to the downside. Perhaps, like I was saying earlier this morning, this level right here, well, if you look on the 4-hour, let me do this, it would be easier. On the 4-hour, this level here, which is the connection point where the moving averages are meeting, so it's 109,400 and some change. But it's also a former close of a bullish candle engulfing 4-hour candle and the open of a reversal candle that turned out to be a failure for the moment. So this level was resistance once, twice, 3 times, 4 times. It got broken through with this 4-hour candle, but it hasn't been retested. So that's apparently a good level for me to take profit if price get there. Yeah, so let's keep monitoring. All right, I was initially looking for a swift move. It's not as swift as I would like it to be, but it's a move in the right direction nonetheless. Let's see how price reacts when we tap this liquidity void right now. Is it eager to dive into it to capture liquidity or not? Because right now on the 10-minute, we broke through the former high on the 10-minute, and the next potential area where we could stall is 109,609. So that's just below the liquidity area. Currently the profit is $138 for a risk of 60. It's not too far away, the 4-hour candle, the 4-hour moving averages on the 4-hour chart. They're not too far away, but let's see. Let's see how do we tap into this liquidity void. All right, resuming the recording, the liquidity void is just about to be completely absorbed and price keeps on going lower. Notice very little volume on this move down, and we're not too far away from the US open, so I'll be cautious. Right now, the position is $198 in profit for a risk still of 60. I'm not moving my stop into break even because that would be just the level of this moving average. And that might be a retest on the way. Right now, the liquidity void is completely consumed and price is at, on this 10-minute chart, is at the level I was indicating earlier. No, it's breaking through. Profit is 250 and we're getting close to the 4-hour resting area I was initially targeting when I took the short. So that would be essentially taking profit 109,427. I want to reduce the risk not too far away on 600. What was the low of this candle? 562. Okay, there might be another push, perhaps. Volume is not there. Volume is very weak, very weak. The nicest candle we had was the candle of the breakthrough of this morning range, which was indicative of potentially some more downside to come. Otherwise, nice bullish, nice volume candle as we got close to the high, to forming the high of the range. But let's keep an eye on it. Right now, the profit is shrinking a bit, 173 for a risk of 60 still, and 17 seconds to the close of this candle. So let's see. Only a side comment, I'm resuming the recording because the previous 5-minute candle, this bearish candle, started as a attempted retest of the moving average. Yeah, so we had the 5-minute candle who made a long wick and closed bullish. And the next one started to move up towards the moving average, but close towards the low of the wick of the previous candle. With nicer, thicker volume, still very weak, but thicker than the previous bullish candle. So all in all, that tells me there is still sell pressure, still supply to the downside. So perhaps this liquidity void gets tapped as well. And that would represent an area right around my resting area on the 4-hour candle where I told that I will be exiting the position. So let's see if we get there. If we do, then I will exit the position, perhaps a partial, depending on the activity once we tap the liquidity void. All right, I'm about to exit a partial, so I'm going to buy back a quarter of a contract on this level. So currently the profit is 332. I'll take 344, sorry, 344. I'll take a third out at this level, and I will move my stop this time to a little bit over break even. Okay, let's keep watching. Okay, well, price is pushing further through the liquidity void. The volume is identical to the volume of the previous candle, so no rush in there. I'd like to see it consume the liquidity void. Yeah, perhaps this resting area will not provide sufficient buy opportunity. One way to identify whether an area you've identified on a chart is a worthy area to enter long, short, or exit position is to look at the tape and to see thick orders being placed one way or the other. Right now, we're getting through the liquidity, so I'm gonna take another half of the position out. So right now I have a half of a contract. I'm gonna take half out. So 239, and that's a profit of 119. So the previous order I closed, I put in the books 114, and right now I'm putting 119 in profits. You see that this candle is getting some activity. It doesn't mean that it's going to be the last candle of this down move, because you see that the volume is increasing, so there is more demand on this area where the candle traveled compared to the previous 2 candles. Yeah, there is more demand at this level. Will that quantity of demand be sufficient to reverse the trend, or to stop the trend and reverse the price action? We don't know yet. But it's good to notice the change of volume, even though it's still very low compared to the previous candle on a specific area. Yeah, so let's pause and resume when there is price action. All right, it seems that price is not willing to stop at the resting area on the 4-hour chart. We pierced through one moving average. We're just on the second moving average, and if you see that there is a tiny bit of liquidity void left, not for long though. I'm considering to completely exit the position at the moment. So it's $140 profit, exited. So that was a nice trade, good execution, I think. Good management of the position. Can always do better, but I've locked in some profit. That's the thing, I'm not eager to keep the position riding, especially on the 5-minute, until a bottom forms. No? So it can go much lower, but it can stop here and revert and eating my profit. That's the 4th trade of the day.